Let's jump right into the stock market technical and fundamental analysis. So, as you can see, I have the SPY daily chart on my screen, and I have an indicator I always use to start off my technical analysis on the market. It's this white line. It's AVWAP-Q. I talk about it at the beginning of every single video I make, and basically how it's read: when price is trading above AVWAP-Q, buyers are in control. When price is trading below, sellers are in control. We broke below AVWAP-Q back in February, and since then we have not been able to even close to breaking out above it. As I talked about in my past couple videos, I've been saying that we should be expecting a bounce after this 10% drop we saw in the market, and that depending on the height of this bounce would determine if we're going to see a market bottom or not. Last video, my thumbnail was this isn't the bottom. Um, and the reason why was because the way that we have slashed through the 200-day moving average, which I'll put up on my screen right here, which is this purple line, we slashed through it. That is very, very bearish. We slashed through it in heavy volume. Look at all these dips previously. We didn't even hit the 200-day. We had the 150. We bounced all the way back to all-time highs. We hit the 100-day. We bounced. Even with this 10% drop we had in 2023, it was a 10% total drop, but look at the bounces we had on the way down. Even though we broke below the 200-day, we saw that there were buyers at every support level on the way down there. So that gave a higher likelihood of, recovering that technical indicator. But this one, we saw no evidence of that. Sorry, I keep on turning on my thing. All right. No evidence of that. No bounce. Maybe, when I mean bounce, I don't mean like 1 day candle. I'm talking like 3 to 4 to 5 days, like 1 week of trading upwards. We had one green candle, bearish engulfing. Green candle, gap down. Green candle, gap down. Super, super bearish price action. So just from doing VPA, volume price analysis, consistent selling with high volume breaking below technical indicators, that is bearish. I was not expecting to see some bounce that goes all the way back up to AVWAP-Q, the 50-day, the 100-day moving average, and even testing that. I wasn't prepared to see that. Of course, it could happen. I knew that, but to me, the odds were that we were probably going to test the 200-day, and at the most, which I drew last week as well, at the most, this white line right here, the previous swing low. We tested that to the T. So if you saw my video last week, you could have prepared for shorts, right? You could have taken your shorts right here with your stop loss, maybe some above over here. You would have been so profitable already. The market dropped. Already 3.3% just in 3 days from that level this week. I hope you guys find value in this because this is what I do every week. I'm just posting it to share with whoever wants to see it to help them become a better trader and better investor too. So, one more thing I want to point out is just to show you what I mean by slashing price action, slashing below the 200-day moving average. Look at the start of the 2022 bear market. Slash through the 200-day on heavy volume. All right. 2020. I know it was COVID, but still, like you sloshed through the 200-day. This bounce, lasted a week. 2018. Slash through the 200-day moving average. Anytime you see that with heavy volume like that, respect it. For sure, respect it. Don't just throw out all your money into that first dip and think you bought the dip and you're done. You got to be more cautious and more careful than that. So overall in the market, I am bearish short term to medium term. I'm still bullish long term. The reason why is because the 50-day moving average in blue is above the 150-day moving average. So they're still above each other. They haven't crossed below each other yet. And the 200-day moving average is still sloping upwards. What would turn me bearish long term and what would signal pretty much a bear market and recession possibly as well, but definitely bear market, is I want to see the 50-day close below the 150-day and both moving averages start sloping down like this. That is the tell that we're now entering a bear market. We're going to start seeing lower lows and higher lows on the daily chart. What I mean by that, look at 2022. The 50-day crossed below the 150, and they both started sloping down around here at this point, right here. At this point here, you can expect to start seeing lower lows after this point and higher lows, which is exactly, I mean higher highs, lower highs, geez, which is what we saw. Bam, lower low, lower high, lower low, until when? You guessed it, until the 50-day crosses back above the 150-day, boom, and they both start sloping up. Now, you start seeing this as a long-term investor. This is where you start going heavy with your investments. You start going heavy. You go, all right, we're going to start seeing higher highs and higher lows. If you invested a lot at this point here, you would have rode this wave even till now with this current market drop, a 40% gain. That's how this video will help you with investing. Now, that's if you do that if we know we're going to see a bear market. Obviously, we don't know that yet because we haven't seen the crossover on the 50 and 150 yet. So the way I'm handling my investments is I have my cash that I have. Let's just say this is my cash. I divided it into 4. I have utilized 1/4 of my cash reserves on this drop right here. I still have 3/4 of my total cash that I'm able to put on these further market drops. This is the 15%. What the heck? This is the 15% market drop. I'll deposit another quarter over here. Maybe you see a bounce. If we get a 20% drop, another over here. A 20% drop, we're probably going to start seeing the effects of the longer term bear market, which we just talked about. So in that case, I now will have 1/4 of my cash left. And in the meantime, I've been accumulating cash again to my portfolio. I mean, this move will take time. I mean, this is my steep drawing. It's already showing June, so let's just say by August, that's a few months of savings. I'll have probably another 25% that I could put into the market at that time, if we see even lower low. But the point where I'm going to be going heavy, all the rest of my cash, all the rest of everything that I don't need in my daily life, when I start seeing that crossover and that beginning of that new bull market, just like over here, expecting to see the next wave up. Now, some brief fundamental analysis. I'm sure everyone's aware about the Trump tariffs. They will affect the market. Like I talked about in my last video, the FOMC has validated that this will affect the inflation pathway. They don't expect to see inflation down to 2% this year anymore. Therefore, they're only going to cut maybe twice this year. But they still believe that this inflation from tariffs is transitory, and they've said that it was shown to be transitory back in 2018 as well. So they expect the inflation target to be hit maybe next year. So on that side, if we do see some kind of recession due to this, I don't think it's going to be something crazy like in 2008. I don't even think it's going to be something crazy like the dot-com bubble. Maybe we'll just see like something like 2022 again, maybe. Nobody knows for sure, but just try to prepare for the worst, hope for the best, right? So we didn't have too many news this week. I just know we had the GDP quarter over quarter, which came in slightly above the forecasted 2.4%, down from the prior reading of 3.1%, which is expected, right? Everyone's expecting GDP to decrease by tariffs. The key here is not the fact that it's decreasing. You want to make sure it's decreasing as projected or better, right? If the forecast next quarter is like 1%, we want to see the actual come in around 1%. That means that the market is behaving as expected. The economy is behaving as expected. The market does not like unexpectancies. They don't like to know, they don't like uncertainties, they don't like surprises. That's the key to fundamental analysis. We're not economists, right? I'm not an economist. I don't have an institution with quants to do my research. I don't have that. But this information is provided to us, and I have enough trust in the economists that we do have and their reporting, being that they are a part of the government agency, that as long as we are hitting their forecasts, to me, that's a good sign. We did have Core PCE price index, which came in around just slightly above forecasted, which is not a surprise. Personal income and personal spending. Personal income came in double as expected at 0.8%, increase even from prior. They were looking to personal spending or personal income to decrease from zero point 0.7 to zero point 0.4 and actually went up, which is good for us, the common people. Personal spending came in slightly below expectations, but pretty much as expected as well. So nothing too much here. It doesn't really say much about the economy. This did not affect the price action this week, honestly. Let's look at what we have next week. Next week we have a big one, unemployment rate. We are very, very attentive to this one right here. Unemployment is the key to recessions because when people can't pay their debt, whether it's a mortgage or credit card debt, or companies need to start, you know, cutting costs, and that could come in terms of laying people off, like unemployment, that will be reflected in the unemployment number. And if we start seeing that tick up, that's a recession indicator. Keep in mind, we already had the yield curve inversion and uninversion. That's a big recession indicator, like really big. So we're kind of like just waiting for it to happen here. But if unemployment can, stay controlled, I guess you could say, that's a great, great sign. But so for now, they're forecasting it to just only increase by 0.1% to 4.2. We'll see what happens next Friday. Keep an eye on that. Last but not least, on this video with my active trades, I'm also a trader. I work full time. I trade on the side to generate extra income to try and enhance my life for myself and my family. I'm sure a lot of you out there are in the same boat as me, and that's also an inspiration on why I wanted to share my knowledge for free. I share all my trades live in real time. I share valuations on stocks every single month. I share my analysis. I'm in the Discord server. I run my own free Discord. I put the link in the description below. Please feel free to join. It's growing. We're all learning a lot from each other, and I'm always there to answer questions and just to collaborate. Um, so I'm mainly an option seller. That's what the majority of my trades are. Sometimes I take directional trades, but I try to stick with option selling. So I was assigned 100 shares of Nvidia at 120 strike, and I believe that was on, Friday, March 21st. On that Monday, I sold a covered call on those 100 shares at the 150 strike. And when the market dropped, I took profit for I think it was 92% profit on that trade. I plan on opening up another covered call in Nvidia next week. Yeah, hopefully, if you get like maybe some relief a little bit in the morning. Also, another covered call in Nvidia, maybe even at a 120 strike since some price market has moved down since then. And I'm going to continue to sell covered calls on those shares. And eventually, when we near the extent of the next leg down, maybe somewhere around this $97 level with this gap and the previous lows over here, I will sell another put on Nvidia, maybe slightly below this level to get assigned. Why don't I sell it now? Well, I want a lot of premium. If I think the market's going to keep going down and I sell it here at the strike, maybe I'll get like $1 premium. But if I wait and I stay patient and I sell that put when the price is nearer, I can maybe double or even triple that premium. So that's my plan for Nvidia. Same boat for Google. I was assigned 100 shares at 170 strike on Google on Friday, March 21st. On that Monday, I sold the 172.50 call. Obviously, Google dropped with the market pretty aggressively. I closed that covered call for about 95% profit. And same as Nvidia, I plan on selling more covered calls, probably at my strike of 170 next week. And same thing, I will try to sell a put on Google at a lower price that I think would be better, maybe around 145 or so at this low right here. Last but not least, I did sell a put on Broadcom. Broadcom is an amazing, super strong chip stock. And people focus on Nvidia and even AMD, but I mean, look at Broadcom. I mean, that's so strong. And we had that gap up in earnings all the way back in December. It was a gap up of like over 20%. And I did not chase it. Instead, I waited finally for this moment when the price came all the way down to sell a put at the 155 strike. I believe that's a very fair price. That's the low before the earnings jump. And that price I would be assigned at a discount of 38% from the all-time highs. I got maybe like $71 premium for that. I'm okay with that because I don't have a position yet in Broadcom. And those are my trades. Um, yeah, so again, I post them in my Discord. Um, I would love to see more people join. I'd love to help people. I'd love to collaborate with different traders at different levels and investors. So please join. If you like this video, let me know. Give it a thumbs up. Subscribe. I post these every week. I'm trying to make a schedule to post more videos throughout the week, showcasing my trade signals. My Discord also has trade signals. I can showcase some of it here. I post them in the Discord. This is the buy signal here, 2% gain. Sell signal over here, 2% gain. Buy signal over here, close it before earnings, 7% gain, etc., etc. I post these in my Discord. I also post the results of them every single week. And obviously they're not perfect. I'm not here to say that they're perfect, but they have a higher than 60% hit rate, which is, I mean, for any trader standards is amazing. I'm very proud of them. I'll try to make videos showcasing those throughout the week as well. And yeah, any questions? If you have any feedback for me, I'm new to YouTube, so leave them in the comments. I appreciate it. And good luck next week.